right, here we go. So basically, we got the consumer price index coming up here at 8:30 this morning. It is 8:16 a.m. Eastern Standard Time. So we got about 14 minutes left until we get the print. There is a bright screen incoming for you guys. This is basically what we're waiting on here. I'm going to go to the economic calendar so you can basically see what's going on. We got the core inflation rate. It is expected to be at 6.5%. Previous month was 6.3%. And then the number that everybody's waiting for, the inflation rate itself, coming in last month at 8.3%. If you remember, it was 8.5%, and the markets, or the number came in at 8.3, and the markets took that very, very badly. Even though it was a lower number, and that's what we wanted to see, the market still ended up selling off hard. And we're coming in this morning expecting an 8.1% inflation rate read. So basically what everybody and their brother is expecting to happen is if you get an 8.1 or higher, you're going to see the market sell off. Bitcoin has already started that sell off, taking out yesterday's low as well as this morning's low. So yeah, anything under 8.1% is expected to be bullish. We will see. You have the news, and then you have the market's reaction to the news. We have no clue how the market is going to respond to this news, but what we do currently have in front of us is Bitcoin has already made a run down to the lows. This is the daily time frame over here in the top left on the chart. You can see that this daily candle is pretty big compared to what we had yesterday and the day before that. So yeah. Basically, we're just waiting to see here what goes on. On the right-hand top of the chart, I have the 5-minute time frame of Bitcoin up there with a line setting at $18,689. That is going to be the bearish hourly candle's close. And on this strategy, the way it works is essentially your bearish closes will act as support. So what we want to know is, do we blast down underneath that and go try to make a fresh low, maybe take out the low that we put in on Wednesday, September the 28th. Do we go for that? If we do, then obviously there's really nothing you can do. Any short positions should already be engaged. I posted a tweet on Twitter yesterday showing all of my active short positions. Those are real positions. One of them was taken during the live stream. So we do this for real here. This isn't a joke. I am trading with live funds, real capital. So yeah, just off on the other monitor is the Bitget platform. If you guys want to trade on Bitget, there is a link in the description. They have the cheapest fees than any other exchange in the world. They have zero KYC and all that good stuff. So if you want to check them out, check them out. It is an affiliate link. Use code XTSC. That is X-Ray Tango Sierra Charlie. All right. So basically what I'm looking to do here is take a gamble, all right? The CPI coming in lower than 8.1%, I think, will cause Bitcoin to just fly off to the moon. The problem that we have right now is Bitcoin and the S&P 500 are negatively correlated, which is not typical. These things are very correlated. So much, in fact, that when you take out fresh daily highs on the SPX, typically you're taking out fresh daily highs or making fresh daily highs on Bitcoin. Today, we have the exact opposite going on. You can see S&P 500 down here on the bottom left, trading up at high of day, looking for 2 days ago's highs. Oh, sorry, that's the wrong one. Let me put that back over there. Let's go over here to the daily time frame. So you can see here you're looking for yesterday's high right now. You've already made fresh daily highs on today's range. So Bitcoin has made a fresh daily low and also taken out yesterday's low and the previous day's low and pretty much any low all the way to September the 29th. So Bitcoin is pretty much trading very low this morning already, and the S&P 500 is up on the highs. So we definitely have some stuff going on right here right now. Is it portfolio adjustment before the CPI news? Is people expecting a bad print and already selling off Bitcoin? Or is the move lower just a fake out move and it's going to blast off and create a fresh daily high? Well, we don't know. We never know. Trading before a news event, there is a strategy that I like to deploy called the liquidity break strategy. And essentially all you're doing is you're waiting for a fresh daily high or a previous day's high to be taken out if you're looking for shorts, and then you just throw on a short position. We've already done that. So what I mean is you've already taken out the lows of the day and all the other lows. So there isn't really a fresh liquidity run to make on Bitcoin to the downside. So I have freed up one of those short positions on the Bitget exchange, and it is the tether side. So right now what I have currently done is I've already taken a buy position at $18,689 and expectation of that going higher. I am risking 2% on this trade, and I have my stop loss setting well under the low of day just in case it wants to make a fresh low of day tag and then go to the upside. If it doesn't, if it continues to go lower, I will be stopped out and I will lose 2%. There is nothing else that I can do with it where it currently is. So I can't short it all the way down here on the lows, especially knowing that there is a big number coming in. And if that number comes in, like say really low, 7.5 or something, we're expecting Bitcoin to make fresh daily highs. All right. So that's basically where we stand. You can see the dollar is pushing lower. These two assets here typically trade inverse one another. And for some reason today, they are trading right alongside of each other. So there is a little bit of caution. I have to throw out caution to you here because of this simple. If the dollar and the SPX are trading normally, right, they look normal. That's the way it's supposed to be. So yeah, if the S&P 500 rolls over and goes down to make fresh daily lows, Bitcoin will probably follow it. So Bitcoin will have a nasty down day today if that happens. But what we want to see is we want to see the dollar continue to go lower. We want to see Bitcoin find support right in here and then just take off to the upside. And that's what we're positioned for. Naturally, if it continues lower, then that trade will be stopped out. And I will be 100% okay with it because it is an amount of money that I can afford to lose. So that's the big difference here. If you're doing this position with me right now, then you need to make sure you're doing it with an amount of money that you don't care to lose. We never take a trade in expectation of winning it. We only take a trade and we expect to manage our losing, right? That's what we are managing. We are managing how much money we can potentially lose. We're not trying to expect to make money. We got 7 minutes left. So basically this is the level right here. If we start going ahead and closing 5-minute candles under it and start looking like it is going to take or go towards the fresh low of day, then I will just close the position and I will look to re-engage the position lower. But I'm not going to do that multiple times. It will be a one-time thing. Because with the S&P 500 trading at the high of day like this, it makes me very, very cautious. Your DXY is trading at the low of day. So while we have some time here, let's go see if we have any wicks nearby on these two assets. You can see that you do have a downside target on the DXY at 112.41, excuse me. 112.41, that is $112.41. And then over here on the S&P 500, you have a fresh daily high, or if you take out yesterday's high, that would give you a target of $3,622. Downside targets, 35.59.80 on the S&P 500. Upside target on the DXY would be 113.592. And I do expect that to happen no matter what the number comes in. I expect one of those lines to get taken out. Excuse me. Apologies on the hacking on the microphone. So yeah, that's where we currently stand. All right. Good morning, everybody. Welcome. Thank you all for being here. There's quite a lot of people in here. Usually we carry about 60 people, so there's double that in here today. So thank you guys all for being here. Like I said, it's real live trading. It's not a paper account. We're not doing anything like that. We are live traders. That means we trade live. All right. Bitcoin did get a little bit of a flashy wick there, flashy 5-minute candle on the Coinbase exchange. That is the Coinbase exchange. I am the actual account that I am taking positions on is Bitget. That is off on the other monitor. There's I'm not going to show you that because then I can get into trouble. So that's why I don't have the actual live position on the screen, if you're wondering, because there is some rules against stuff like that. All right, so we're just kind of waiting here, right? We got 4 minutes, 4 minutes until that number comes in. We will get the number, and we'll see what happens with price. And it should be a pretty good sized candle regardless of the number, because we have seen a volatility crush, if you will, especially on Bitcoin. Essentially, all that means is that the daily ranges have been very tiny. I can put an indicator up here real quick just to kind of show you this. We'll go into the hourly time frame, and I will pull up this. No, I can't pull it up over here. All right, so we'll put this one on the 5 minute, and we'll do that over here. Excuse me. So this indicator right here just shows you volatility. It's similar to a Bollinger Band or whatnot, but you can see how wide the lines or the bands are away from price. This was, I can't remember when that was. This was your last CPI number over there. So since we got the last CPI, Bitcoin's essentially been trading sideways. So these assets are definitely trading. They're definitely trading with whatever happens in, inside of the Fed or whatever the Fed does, and the Fed's looking at CPI and other things as well. So very volatile stuff happening here. If you don't want to take the position just yet, but anyways, what I was saying is you can see how these bands are narrowing. That just means volatility is tightening up or compressing. So when that happens, when you have a volatility compression, the only other thing that it can do is have a volatility expansion. And what we want is to see volatility expand as price is trading up. We got the number getting ready to come in here. Just getting situated. 2 minutes. But yeah, that's basically what we're doing here. An hourly close, which the hourly will not close when the number comes in. You got 30 minutes left until that happens. So basically what we want to see is we just want to see this area hold on a close. And since, like I said, since you got the dump already, I'm expecting it to go up. Here we go. You're getting a lot of volatility 1 minute before you can see you just made fresh daily highs on the S&P 500. Did not take out our targets on the DXY, but that was a nasty move right there. Nasty little jump up before the print. So there is your target for today. Now, if you come out with 8-1 and higher, this is going to more than likely roll over, and Bitcoin will stop me out. But if we get that lower number, like under 7.9, I expect Bitcoin to go the opposite direction. So I can't take a short down here, though, like I said. All right, 829 is coming up. You can see Bitcoin firing up here a little bit, same as the S&P 500, lagging the S&P 500. There we go, big, nice little move to the upside. That puts me in well above into profits. So as price is pushing up right here, right now, I am taking profits, and I have got my stop adjusted to break even, just in case that happens right there. You can see how volatile that was. Nice trading here this morning on the CPI print. Let's go see what that number is here. All right, we don't have the number yet. What's going on here? Somebody in the chat want to drop the numbers? You can go ahead and do that if you've got them. I do not. Bitcoin is dropping off of the screen. So numbers not coming in good here. Look how the S&P 500 made a fresh brand new daily high, instantly go down and make a fresh daily low. That is a nasty bearish signal. So let's see what the numbers are here. All right. You got 8.2% on the inflation. That is higher than 8.1. That is why the market is reacting bearishly. You were forecasting 6.5% on the core inflation rate, and you got 6.6 there. So this is going to be a nasty bearish day. Yeah, there goes the dollar up there taking out targets. That is the target. I do expect it to be taken out. And here you go. So on that gambled position, I did in fact bank about 11% in gains right before the market dropped down and stopped me out. So it ended up working out flawlessly to perfection. Basically, I'm just taking profits when the candle explodes to the upside, because that's a big move. So you can get paid really quick that way, no matter what the number is. But this, I do expect us to see more continuation to the downside here. Here is fresh bear market lows on the S&P 500, taking out last week's low. This down here, that is last week's low. So the bearish trend is to continue for at least another month. So yeah, we're going to go ahead and check out these other short positions, as they should be nice and in profit, and they are. Let's see, did Bitcoin take out? No, not yet. It is right there. Oh yeah, it did take it out. All right, so you did take out the September 19th candle low right there. So now, ladies and gentlemen, the only low left to take out on Bitcoin is the June low. This is not bullish. This is the exact opposite as bullish. That's the next low to take out. I do expect it to happen if inflation continues to do nothing. I mean, inflation should have topped out already. We should have seen a 7.6 read, but we didn't. We got a higher print. That's not what the market wants to see. The market wants to see lower. They want to see the inflation is steadily making lower month over month reads, but it is not doing it. It is struggling to get out of 8% inflation. So let's go over here and take a look at the actual inflation chart itself. Briefly, it's going to be right there. That's okay. I know that. All right. So here you can see that 8.3 number. The Fed has a target of 2%. So that's down here at the 2 read. So I'll go ahead and throw a line across there. That is it. It doesn't have to be perfect, but I guess let's go ahead and make it perfect, because that's what they want. They want it to be 2.0% inflation, and you're all the way up here, 8.3% inflation. It is not good. Simply, you just made 1/10 of a tick lower on inflation. Not good. It is not good. That means the Fed is going to continue to be hawkish. Everybody's been expecting the Fed to pivot, but the Fed isn't going to pivot until they see inflation trending lower. Support is 18,293 based on trend line. Trend lines are very subjective. The objective support, Bitcoin is trading under it, and that is $18,462. That is your objective support on a 3-day time frame. That is also objective support on the daily time frame. Bitcoin has lost all weekly, monthly, and daily supports. This day here is when it lost the daily support, and then it was the next week when it lost weekly support. But as of right now, you're trading under monthly support. Monthly support is here, right? In September, you closed under it. So basically this month, all I've done is I got short at the top of the monthly range. And I basically told everybody in the Discord and everybody that comes to the YouTube channel that if you're trading under monthly support, you have to just be bearish. You just look for shorts. It's just as simple as that, because the trend is down and the trend is your friend, and you're really not going to see a change or a shift in trend until the Fed pivots. And the Fed isn't going to pivot until they see obvious and clear signs that inflation is topped out. So on the Coinbase data feed, the low for September is 18,153, spot 13, 18,153. And then this month, today's low, 18,131. So about $20 lower there. That is a legit low. You have taken out September's low. So getting short at the high of October here was a good call. Ended up being a good call. I didn't know it was going to be a good short. Naturally, no one knows what price is ever going to do. But with September's closure being under support, I thought it was a pretty decent bet. So I'm only in 3 of these positions now, excuse me, because I had to close one of the shorts down so that way I could take a long trade today on the futures. But this is legit my entry, my short positions that I was holding. This one down here, this short USDTM futures, that was a short at the weekly open. That's the one I closed. It was the closest one. I already booked realized gains on all 3 of these positions. All right. All 3 of these positions have booked gains. So I am able to basically do nothing now. So this one here from the last inflation print that we got, that's the short that we took then. And then now here on the new inflation print, I didn't get a short entry. I was expecting lower inflation. So that was a bad call. I should have left the other trade on, but I did want to be, I did want to catch it if it did move in the up direction. So I still have the top 2 short positions on. They are real legit positions. The people that trade with me every single day inside of my Discord, they will tell you that those are legit real positions. All right, so I need to get the DXY back up here. Now that we've made fresh daily lows and all this stuff, can we see the market reverse? I doubt it. I think you're going to see, oh, that's not the dollar. I think you're going to see the trend continue. All right, so on the DXY, you have an uptrend here. It's an obvious uptrend. Basically, what happened was the DXY came down here for a support test. All right. So the 21 exponential moving average is a very quick moving average. We only look at moving averages on the daily time frame. We don't care about moving averages on any other time frame. But you can see here that basically all you did on this day right here was made a trap. We made a trap. You closed under the 21, but at an old resistance level, and sometimes resistance can act as support, and it did here, right? So this is considered a pullback in what is already a very, very bullish market. Now, why is the DXY so bullish? Well, there's 2 reasons. One is it's a flight to safety. It's the world reserve currency. So that's the one main reason why it's bullish. The entire world is experiencing inflation. The entire world is experiencing pretty much a recession. So the dollar is a flight to safety. So that's where the money went. And then the second reason why you're seeing continued bullish strength on the dollar is because the Fed hiking interest rates is very bullish for the DXY. So you have 2 main factors there driving dollar strength. And there's no reason to expect that to change in here in Q4. I expect the dollar to make fresh highs for the Q4. Right there is that's basically the top of the market there, or the yearly high, if you will. So I expect the dollar to make fresh yearly highs moving on. This inflation wasn't really what we wanted to see. So yeah, Bitcoin breaking down. Is it going to go down and tag the $13,000 resistance that we were waiting for? Yeah, it's possible. So this is the next area of potential support that we're looking for. This is yearly, quarterly, and monthly resistance. Will it act as support? I don't know, but it did act as resistance here. The first time once we traded under it, the first time that we came back was a nice resistance test. And then when the Fed started to be really, really bullish from March 2020's pandemic, you broke out there, and this, it hasn't been retested since. So this is where we're basically looking for Bitcoin to trade to eventually. And if it does, I'm going to be a massive buyer down there. I am overall bullish on Bitcoin, just not right now, right? Because it's in a bear market. But overall, like within the next 5 to 10 years, I think Bitcoin is going to find a bottom and be trading well above $13,000. So next 10, 15 years, I wouldn't be surprised if Bitcoin was trading up at $150,000. So that's what I'm trying to position myself for. for any new people in this live stream today. So yeah, that's where we're going to be looking. 13,863 is that target. I was talking about this price since forever, since before it was popular to talk about. I even had a video on this channel a year ago talking about this price. So when the bear market started, essentially, I was talking about that price. I don't expect it to get there anytime soon, and I don't know if it will get there because there's so many reasons and factors that says that you should be a buyer on Bitcoin now. You got the famous MVRVZ score, which this metric basically just distinguishes what is considered overvalued and undervalued. And you can see over here, you're in the undervalued region. So, people are going to buy that. It has typically been the place to be a buyer in Bitcoin's entire history. So yeah, things can change. We're not expecting the same exact thing to happen as it has happened because inflation is new. Bitcoin's never experienced inflation. USD inflation. Nothing, Bitcoin has never experienced that. So we don't know how Bitcoin is going to act as long as we have this inflation. And what the Fed is afraid of is the longer inflation stays at these top levels, the worse it hurts Americans, right? The worse it hurts Americans, because if it starts to stick, then that inflation is going to be passed down to the consumer. And that's why the Fed is just hiking interest rates aggressively to try to get inflation to start trending lower. And they have been unsuccessful in that for the last, couple months. If we go back to the bright screen, I'll pull this up right here. This is basically what the inflation was doing. You can see how aggressive it was going up. From February to March of 2022, you went from 7.9% to 8.5% inflation. And then pretty much since we've been there in March, we've been stagnant with a low of 8.1, or no, 8.2 is the new low. So you got 9.1, 8.5, 8.3. Next, this will update and it will say 8.2 there. So it does look like it has topped out, but it's not coming off as quickly as the Fed would like. All right, let me get some of these questions here. Music is still on. We can't hear you. Yeah, I kind of figured as much. This microphone is very low. I do have it turned up all the way. I'm new at this. This is a new microphone, so I have to figure out why it is so low. But if I turn the gain up any louder, then I'll start blasting your eardrums out anytime I use a P word or a T word. It'll cause the microphone to distort. So I just have to deal with it until I figure it out. Mr. Pepe is gracing us with his presence once again. What's up, baby? The neighbor's working on mowers again. We have a neighbor who is a small engine repair shop, and it does it out of his house, so lots of mowers and stuff. Heath on Bitcoin weekly chart, check. Lagur RSI, this tool is amazing for investing when it comes over 20. Lagur RSI, I've never heard of it. I'm almost 100% correct, 100% sure that I am mispronouncing that. LAGUERE RSI. So this thing right here. Yeah, I mean, I don't understand it. I don't know how it works. Let's get it on the daily here. So it like flatlines at oversold, I guess. Yeah, I'll look into it, but I mean, yeah, right now on the weekly time frame, you're a buy on Bitcoin. You have been ever since you've been oversold, because in Bitcoin's entire history on the BLX index, anytime you've been oversold on the RSI, it was a very good place to be a buyer. There we go. All right, so you can see, right? Every single time you've been in oversold, you've typically wanted to be a buyer, not a seller. Here's oversold. Oversold reading actually called the bear market low there in 2018. And this time when we got oversold over here in June, it was the most oversold Bitcoin had ever seen before. Right there. And then for the last 4 months, you've essentially went nowhere. You've just been trading sideways. There is a trend line here. Let's get rid of this. There is a trend line here. Not the lower one, but this top one here that people have been looking at and posting all over, all over the place. It's off log anyways. That trend line there, people were expecting a breakout. And if you put the same trend line on the RSI, you have broken out. So let's just do it like this. Oh, like this. So if you put the same trend line on the RSI itself, you can see here that it's been broken out. Well, it's not perfect, but you get my point, right? You broke out over here. So they were considering this like a breakout on the RSI. But the problem is the RSI is a lagging indicator, so it lags price. You got to get that breakout on the weekly time frame over the trend line before you can consider it a breakout. Just because the RSI is broke out doesn't mean nothing. There's that same trend line on the daily. Let me get it exactly perfect though, because for some reason I've noticed when putting trend lines on the weekly time frame with TradingView, they are not the same on the daily. But you did break out there on the daily time frame, but I mean, it's been just straight down ever since. In a downtrend, ladies and gentlemen, you look to be a seller of resistance. Unfortunately, on this pop here, when we had the CPI print, last CPI print, you were above resistance. So getting short was very difficult. The strategy that we did was we just waited for a fresh daily high and we sold it. I mean, that's as simple as that. That's what we did. We were watching it intraday live on stream. Last CPI print. We waited for a fresh daily high and then we got sold. We just sold it. And it ended up being a perfect tick. A perfect test. A beautiful, beautiful short entry. But let's go back over here because I don't want people to be mistaken. Today is not green on Bitcoin. It is very much red. So that's probably the excitement for the day. I wouldn't be looking for new short entries all the way down there. If you were looking for shorts, you got to learn how to sell swing highs. When the market is showing resistance, that's when you look to be a seller. And it's very simple. The strategy that I teach here for free on YouTube is to simplify things for you. It's a very simple strategy. You just wait for resistance to form and you be a seller, right? Seller. Nailing the swing highs is difficult, but if you do that, every time you get a bullish, when you get bullish, don't flip and become bullish just because you're acting bullish. You wait for resistance and you sell it. And I can't do that at the lows. So on the lows, we typically look to be a buyer. But the trend is just going lower. So each time you get a bullish rally, the rallies are getting smaller and smaller. So I think a breakdown is inevitable. If price keeps doing what it's been doing, you're going to see a breakdown. Going to see a breakdown. So yeah, we got a long time before the market opens. I don't think we're going to trade today for the New York session simply because the moves already happened. S&P 500 making a fresh daily low. I mean, you're at fresh bear market territory down here. Fresh bear market lows. Let me answer some of your guys' questions. Good morning, traders. Let's go. Greetings from greetings, fam, and special greetings to my teacher, Mr. Heath. Welcome. Thank you for being here. CPI day. Yes, love it. All right. I'll look into that, Danny. You're in the Discord, so you can talk to me about it a little bit more. when it, okay, I got you there. Support, yeah, based on trend line. Yeah, there is trend line support. Just remember, guys, trend lines are very subjective. When we take entries, we don't want to take entries based on subjective lines. We want to take entries based on objective lines. It is support until you get a daily close under it. That's just the way it is, right? Volume got to go. Yeah, I got rid of it. The diagonal one from the all-time high, etc. Yeah, I know what you're talking about. Yeah, we just looked at that on the BLX. Heath, have you got a pop filter? I do. The problem is it was for the original microphone that I used to use, the Blue Yeti. So it's really big. I'm using a much different microphone now. It's called the Electro Voice microphone. It's a very slim microphone. So if I put that pop filter on it, it doesn't really fit right. I have to get a pop filter for this microphone. I just haven't ordered one yet. I'll get one and then I'll turn the gain up. Like I said, when I bought this microphone, I had to buy a cloud fitter, and I had to buy just had to buy extra equipment just to get it to work. So I'm new to it, right? New to it all. But the Blue Yeti had to go. I mean, it absolutely sounded like ass. Picked up every single echo and every sound in the house. It was just not good for my home here. So yeah, I will get a pop filter for sure. On linear scale, all right, not buying weekly, oversold. One eye is on the macro. Right. People have savings and stimmy checks. Inflation not coming down. Yeah, I mean, it's not coming down. So there's no point in being a buyer just yet. Wait for a bear market low to be a buyer. Is it? I mean, the low that we have on June could potentially be the bear market low, but in order for that to happen, inflation's got to go. And probably what we're going to see in the next couple of weeks is Bitcoin is just going to be very volatile and bearish. You will have up days, but yeah, just be on the lookout for that. Now, is it possible that they buy the market up tomorrow, realizing that 8.2 is still lower than 8.3? Yeah, it's possible. I've seen that happen on FOMC meetings and stuff. You get a very, very bullish market on what was very bearish news, and then it ends up being faded the entire move. So is it possible that this move gets faded? It is, but at the same time, you're fighting the trend. The market is heading in the direction of the trend. So instead of being a buyer in expectations that this move will be faded, just wait for a couple days of bullishness and then be a seller. I'm looking at Christmas, but as regards dates for now, looking at 14-ish. Looking at the 14-ish to lower as far as price. Yeah, I will see what happens. Just be a seller at resistance. Live for now generation. Yeah, bonds are wrecked. Yep. Did you say expect BTC 13,000? No, I said there is a resistance, an old monthly, yearly, and quarterly resistance down there at 13.8. I didn't say I expect it to go there. It could go there. And if it does go there, I will be a buyer, hand over fist. If Bitcoin gets down to 13.8, I will buy that up. I will buy it up. The way that I trade is on the Bitget platform. They have an inverse swap perpetual contract. So what that means is I can use Bitcoin to trade Bitcoin. So essentially you take a position using Bitcoin, and then if your position is correct and you make money on the trade, then that just adds to your Bitcoin holdings. So I'm not transferring dollars to Bitcoin or nothing like that. So I'm trading Bitcoin, making more Bitcoin. So in a sense, I am accumulating as much Bitcoin as I can without using the money that I make on Forex and stocks to buy Bitcoin. I'm just trading my way to owning a lot of Bitcoin. So in a sense, I'm a buyer here, but I am not physically buying it. So when I go short Bitcoin, I'm getting paid in Bitcoin. It's the way most traders should be trading nowadays. I mean, with all the futures contracts that are out there, with all the different exchanges that are out there, there's no reason for you to set in a losing hodl position. You can accumulate more Bitcoin as price is trending lower. You do not have to be a perma bull or a perma bear nowadays. You can be anything. You can be a short, you can be a long, you can be anything. You can change your bias daily. I do what the market tells me to do. As long as you're trading under monthly support, I will be a seller, not a buyer. I was a buyer today, but that was just a gamble trade. Just seeing if we got a lower inflation print, I would take the ride up. I did make money on the trade, though. That's the important part about this. When you enter a position, you got to take your profits. So that way, if the market goes in reverse, which it did today, you still make money. You still, pay yourself for executing the risk or taking the risk. It looks like the dollar's, just after made a fresh daily high here, it is seeming to pull back a little bit here. That's not a very big candle, not as big as I thought it would be. So maybe the market realizes that 8.2 is actually lower than 8.3, and then it finds support. I don't know if it will find support down there, but let's go get some daily supports. Basically, today's closure, you want to see it close above 18,462, as that is objective daily support. All right, so I could get maybe some lower ones if we come over here. There's an objective daily support there as well. And then one down here. So this is the near-term daily support, but you do have a couple supports under you. So those prices are 18,042 spot 15 and then 17,153 spot 95. Where price, if it does get down there, you could potentially see it find support. The June low comes in around 17,591. So that 17,153 daily support, that's going to be a fresh bear market low if it does get down there. But if you close today above 18,462, then potentially tomorrow we'll be looking for a retest of that price for potential longs. If you get downside, if you get a close under and then tomorrow you get downside continuation, then you're not looking for an intraday long. That's the beauty and benefit of being a day trader, right? Is I can be bearish today and then bullish tomorrow, depending on how it is. Because being a day trader, all I am doing as a market operator is trying to operate inside of the daily range. So we try to jump into a position at high probable areas to generate consistent returns, and then we get out. We leave a small piece on for continuation, but most of the time, there's very few times where you're going to nail trades like this, right? Where I actually did take the trade, I did take profits and move my stop, and I'm still sitting in the position because it's been trending lower. That doesn't happen very often, but occasionally it will. And when it does, those are the trades that really pay you. Make your year. Make your whole trading year just by catching one of those. In a sense, it's the less risky way to do it. But now, as of right now, you do have an intraday support here. Once you got the closure there, you can see we just got the closure. So now the close for intraday is going to be there. If you're closing, consistently lower each and every hour hereafter for the rest of the day, then just let it go until it finds support. It could take a couple, 3 days before it does. That June low could be the target. And if it is, it's going to get there. It's a bad day. That's the biggest down day that we've seen for a while. Well, that's FOMC there. I don't remember what this day was, but that's a pretty significant candle. Let's see, do we get fresh bear market lows on all the indexes? Dow Jones, not yet. Dow Jones bear market low is down here. The Dow Jones barely even sold off. That's nothing. You had a bigger down candle here. The Dow Jones is just shrugged off that CPI print. The Russell, big move intraday, pre-market, and the NASDAQ, same thing, which this market's closed. Hang on. No, that's not it, is it? Or is it? Yeah, that's it. So the NASDAQ, no, that's the Dow Jones. Where is NQ1? Sorry. Yeah, it had a nasty down candle as well. So this just isn't open yet. I was looking at the wrong thing. There's the Dow Jones. Yeah, it had a significant down move as well, but still did not make a fresh bear market low yet. But this had already made a fresh bear market low. So when this happened, these were fresh 2022 lows. The NASDAQ and the S&P 500 were lagging. They hadn't quite yet made fresh bear market lows. The NASDAQ did last week. And you are making fresh bear market lows today as well. So the fractal of '08 is still playing out. I don't believe in fractals, but people do. So it's still playing out. I mean, you got a fresh bear market low. This will continue to go lower. All of them will until inflation stops. But I do know there's a lot of investors sitting on their hands right now waiting for lower prices to be a buyer, because this bear market is going to do a lot of bad things for some people, but for some, it's going to change their life. If you're listening to my voice right now and you have an interest in trading, if you subscribe to the channel, will potentially catch the bear market low. And then you can just sit in that position for 10 years, hopefully. I don't know what the Fed's going to have to do in order to make a bear market low. Will they go back into quantitative easing? I hope not. I hope they let the market fix itself. But I'm a realist. The market hasn't been trading by itself since 2008. That's when the first quantitative easing started. But they had a different name for it back then. They called it TARP. That's when it started, and then the market's been trading with the Fed ever since. So the Fed took control of the free markets in '08, and the Fed still has control of the free markets. In a sense, what we can expect is the interest rate hikes to be another 75 basis points. The next time we have FOMC, and that will be in November, right there. November the 2nd is the next time we'll have a Federal Open Market Committee speech, and they are expected to raise another 75 basis points. There's an 81% chance of that happening. And I will show you here as soon as the chart loads up. Oh no, now there is a 97.8% chance. Man. So yeah, 97.8% chance that they're going to go up again. And no pivot, no pivot. And if they would just, I know a lot of people are going to say that the Fed pivots by just, if they just drop and start doing 50 basis point rate hikes or 25 basis point rate hikes. In a sense, it is kind of a pivot, but as long as they're hiking rates, they're hawkish. How hawkish determines how much they raise rates. So like if they're going to be dovish, then that means they're lowering interest rates. And when they're hawkish, they're raising interest rates. So as long as they continue to raise interest rates, that means they are hawkish. Let's get this on the 5-minute time frame because it does appear to be trying to build in a little bit of support here. But I do expect it to just continue. I do expect it to continue, but this will be your newsprint high here. It's not the daily high. It didn't make a fresh daily high, but that is going to be like where you need price to go before you can say that, yeah, you're probably going to see a couple more days of bullishness. But as of right now, just it's bearish. There's no point to think anything else. Where would I be a seller again? Well, I would need a pullback up into support at least. Old support. And you can see that's well under today's open. Today opened well under support thanks to yesterday's close under support. And then today you traded up, took out yesterday's high, and that would have been the place to get short today if you were looking to trade today's short move. That is called a liquidation break strategy. In a sense, I just watched the news prints for so many years, I just started to take those trades. And if you do it on a newsprint day, you stand a better likelihood of making money doing it than if you try to do it every day, because not every day do you take out previous day's lows or highs. You can see here on this day, it traded as an inside day candle. There's only 3 kinds of candles: inside days, outside days, and trending days. That's it. There's no other kind of candle. You either trade inside, you trade outside, or you trend. Nothing else. Today is an outside day. You took out yesterday's high and yesterday's low. So you are an outside day, also known as a engulfing candle. And Bitcoin did not take out yesterday's high. So it's just a trending candle. And yesterday on Bitcoin was an inside day as well. So I guess in this scenario today, when they were trading inversely to one another, Bitcoin was the leader. I was trying to get folks not to try to pick the tops of the dollar. Yeah, don't do that. No, you be a buyer of support on the dollar until you have a clear and obvious trend change. Once again, this is not a trend change. You did not make a lower low here. In a sense, here's your low. There was your high. You made a fresh high and you got breakout continuation. This was just a pullback right back into support, and you got push higher. So until you take out at least this swing low and make a lower high, you don't have a trend change. And if my suggestion to you is just, as long as the asset is bullish, look to be a buyer at support. Just be a buyer at support. Anytime you get a couple days of downside, look for a support to be a buyer. Now, we did call this turnaround spot on the dollar the day it happened as well. If you want to follow me over there, it's just trade_talk_. Because sometimes I will pick out, if I see something that I think is, important, I will put it on the Twitter. Here is the dollar right there. DXY may bounce here. You can see there that big bearish day there. There it was. So you can give me a follow over there on Twitter. It can help you. Here's that day. I said DXY may bounce here. It bounced here. Or it bounced there. You know what I mean? So it's just simple stuff though. But you are coming into a potential area of supply. Right? You haven't tagged it yet. So if this is going to be the first initial move of a potential trend change on the dollar, watch 114.02. That's the area where I would expect resistance to come into play if and only if. But even then, if that still occurs, I would still say be a buyer at support. Probably around 111. So this would be your potential buy zone on the dollar if you do find resistance here and come down. That's potential support at 111 spot 58. Bitcoin now rolling back over. Still haven't made a fresh daily low yet, but like I said, that's a pretty nasty candle there. These 3 5-minute candles here, that's a 2.5% move. So from this swing high to swing low is another 4% on top of that, right? But it's not on top of it. You're not trading 8% off, but just showing you the size of that move there, 4.45%. That's a big down move. And then we can go over here to the on watch, and you can see Bitcoin is currently down 4.41% on the day. Ethereum down 6%. And if we go to all the other cryptos, just a sea of red. This thing is up for whatever reason. Yeah, this thing is printing a bullish engulfing here. So wherever this finds resistance, ARUSDT, ARU, sell it. And then there is nothing else to do. You got a few of them here that are up, down over 9% on the day. You got people down 9%. Sol is down 9%. Sol hasn't made fresh bear market lows yet. There are a couple that has. Kusama has made fresh bear market lows. So that was your bear market low there. You just made a fresh bear market low. Filecoin also making fresh bear market lows. There's your bear market low on Filecoin. You can see today made a fresh bear market low. Same thing happened here on Phantom. There is your bear market low on Phantom today. Made a fresh bear market low. I hate saying it. I know everybody loves to buy cryptos, but right now it's not the time. KNC's down 11% on the day. Fresh bear market lows. Like it's been making fresh bear market lows all week. And look at the size of that weekly candle. The selling is real. The selling is real. Getting destroyed. We got MTL down 10% on the day. Another 9%er here. Quantum down. Masks down 9%. There's just... Let me look on the Bitget exchange or platform here. On the Tether side and see what we got going on here. To see if there's like anything down really big. Nope. It looks like Luna 2 is down 10.33%. It looks like it's the leader. ARU is bullish on the day. So be a seller on that once it finds resistance. Where will it find resistance? We don't know where it will, but we know where it might. It might find resistance there or there. So 937, you could potentially be a seller, but you got to wait for it to show that it is actually resistance before you sell it. Let it find resistance like how it find resistance here at Nowheresville. There's no resistance levels there for it to find. It just found resistance there. and then traded there for multiple days. You could have been a seller there. Try a liquidation break strategy on this if you would. That would have been a successful trade. That is hindsight. I didn't do it, but just wait for a breach of that high and then sell it. Boom. Be a seller. Everything else is down really big, so there is no short opportunities to take in the crypto sphere. We were watching ETC for the short, which was Ethereum Classic. I'll go ahead and pull it up over here and discuss it a little bit, but we were looking for it to sell it here because it was, I mean, you were up on the year for a little bit there. All right, so here's January the 1st. Right there. That's your yearly opening range on Ethereum Classic. You can see once here in March, it got above. So this, while you were trading above this line, you were green on the year. And then again, it did it over here. We were looking to be a seller because Bitcoin's in a bear market. But you can see here how it was really difficult to find resistance. But once it did find resistance over here, it was too late because when I realized it, it was down here. So it was too late. But you could have been a seller anywhere over in there. And I think you still can be a seller on it if it finds a bounce. Because like everything else, I'm assuming this is going to find bear market lows as well. So we try to keep you up on all the plays that are I think are relevant. But I don't see anything else other than this one here that's up today. So we got to give them a week or two for them to find some bullishness so we can be a seller. All right, let's go look at some Forex pairs and see how they're faring. USD JPY, we were expecting this to ultimately find resistance because of the BOJ intervention. They intervened here, but they haven't intervened again yet. So maybe they're waiting for higher prices to intervene again. But also what we need is for the dollar to ultimately find resistance. So basically, there is a play to make if inflation does start rolling over. The play will be to be short USD JPY. But that didn't happen this month. So once again, we just have to trade the trend until we get a next FOMC meeting or the next CPI. So until inflation rolls over, this will be my favorite asset to look for the longer term short. That is only when inflation fixes itself. Once it starts trending lower, I think you're going to find phenomenal opportunity inside of the USD JPY as a short trade. The pound, I was also watching this for a potential short the other day, but yesterday, but you can see here that it broke out to the upside. So we're going to wait for this one to find resistance. Maybe it finds resistance there at 165.418. But once again, that's going to be totally reliant upon BOJ intervention. So here is your Japanese yen currency futures. You can see that they're making fresh bear market lows. So this could take a while to play out. That was an intervention day there. So they might do another intervention day. So what we can do is we can potentially, since we know they intervened here, we can start to look for a 3-drive bottoming formation, which is a Wyckoff accumulation pattern. If the BOJ is accumulating and they are indeed trying to put a floor on this, then you will see something like that accumulation formation do that. When that formation comes up, we will be looking to be a buyer of the Japanese yen because we know that there is intervention on the BOJ side. But the problem is timing that. So just stay tuned because I am currently every single day looking for this opportunity. Because like I said, this could be a fantastic opportunity. Another one that could be on right now is going to be USDCNH. This is the Chinese yuan. We think they haven't came out and said that they're doing any sort of intervention, but we think, when I say we, I'm talking about currency traders, we think that they may be starting to do a little bit of intervention, because $7, $7.20's been an area in the future, in the past, where they have intervened. So maybe this one wants to go up a little bit higher before they ultimately intervene to push it lower. And the same scenario goes for this. You could either wait for that distribution formation or just subscribe to the channel or to the Twitter, and I will let you know what goes on there. I typically do pretty decent as far as getting these plays. Here's one that I posted on Twitter as well. I was looking for this to go lower. Right there on that red, right there at that red arrow there, that's when I made the call out, expecting this to hold as resistance. It ended up being a phenomenal trade the very next day, and we did take it. Made money on it, and then put the stop to break even, and then it came right back up here, stopped me out, and then rolled over. But this was my swing target. This was my swing trade target on that. You can see that we have hit targets and we are pushing lower. And I do honestly believe that USD/JPY will be an opportunity. But the thing is we got to wait for it to show its hand. We can't just sell it up here because retail is consistently selling this. 82% of retail is net short the USD/JPY. And since 82% of retail is net short USD/JPY, you can expect this to continue. Right? That's the way it looked on the pound too. Like 80% of retail was long on the pound when it was making consistent lower lows and lower highs. Over here, they were trying to pick the bottom here too, and this is what happened. Dump. Hola. So yeah, I try to avoid doing that whenever I'm on the same side as retail. But I do ultimately think it will be a good short. Just we have to wait for it to find resistance, and then we can short it. We thought it found resistance over here, but it didn't. It broke out. But we'll get it. We'll nail it. And this trade will probably come in line around when the risk markets are putting in a bottom. Heath, do you think someone had access to the CPI print numbers prior to results since crypto was down compared to equities? No, John, what I think happened is 8.1 was only being expected. 8.1 was being expected. Some would say that the PPI print, since it was higher, was a good indicator that inflation wasn't probably going to come in line with expectations. So that's all. People just sold the crypto markets because they assumed that it was going to come in lower. I don't think anybody had access to the numbers beforehand, but people use the PPI numbers to say that might make inflation come in higher. And PPI is not a good indicator of what the CPI will do. Please understand that. It is sometimes. It's not always. It's like if you go back and back test how often the PPI has called the CPI numbers, it's not that often. It's not a good indicator. But this time it did play out that way. No, they were just front running it. So like, just think about me, right? I'm short here. Then again over here, right? You see how I'm like trying to short the swing highs? I didn't nail this swing high, but I did get it right here on this day. FOMC. FOMC is when I got short. Oh, not FOMC. Sorry, non-farm payrolls is when I got short. So I'm short there. I'm short there. And that's just, ultimately, that's what happens. The more and more sellers that are around, the more and more price will just droop. If we go over here, I can show you the open interest is high. Another thing that was very, very high was the estimated leverage. Look at this spike. We don't know if it's leveraged shorts or leveraged longs, but we do know that high leverage is consistent with markets rolling over and falling down. If you use the Crown Crypto Caves application, he has on his dashboard, he's got a lot of good charting stuff on there that uses on-chain data. And you can see a lot further out on his model than I can on Glassnode, because I don't pay for the expensive plan or the premium. I mean, this is a premium membership, but they only give me a month of data. So Crowns actually goes out a year, and you can see on that one, each time the leverage was like at all-time highs, it was consistent with calling a decent down move. And I brought that up yesterday inside of the Discord. So we were aware we inside of the Trade Talk Discord was very aware that there was a good possibility that the markets rolled over. We were just trying to catch an opportunity, right? Just trying to catch an opportunity. That's all today was about. I love trading the news. I absolutely love it, because you can catch fantastic entries. Some of the best entries, in fact. I'm scrolling through the Discord now. I'm trying to find that. I guess I didn't post the other one. I didn't post the other chart. I only posted this chart. So I'll pull it up right here. Yesterday at 6:57 a.m., so many levered positions. It's been going up all year, but really spiked on this last down move. So, or on this stuff right in here is when it started to spike. I don't know if it's levered longs or whatnot, but levered high leverage it does coincide with lower pushes on the markets. But what I also wanted to show you over here is the accumulation trend score. This is a metric that takes accumulations from all exchanges, across all exchanges. So the lighter colors is a lot of accumulation happening, and the brown colors is no accumulation happening. So back in June, you can see there was quite a bit of accumulation happening around that June low. But since we've been sideways for several months, there hasn't been a whole lot of accumulation going on. Now, we have seen towards the later end of September, we did see this start to fire up a little bit. You're seeing how the colors are getting lighter and lighter. It's still not above 0.5, but it's getting there. So there is a little bit of accumulation happening. But this right here just killed it for me. Like, this isn't good. So, like, we're just go for the bear market only. I mean, you can see that most of the outflows are occurring on these swing highs, right? The yearly high, the fresh 2022 yearly high, we shorted that as well. Right? We weren't long here. Everybody was getting long up there, expecting, $40,000 or 50 grand again, but we were shorting it, and it ended up being the best trade to take. I mean, that trade made my year. So I could be done trading for the rest of the year easily if I wanted to be. But you can see here that, yeah, we got another little spike right here. Those 2 days of bullishness, the inflows just picked right back up. That just tells me that people are selling highs. They're waiting for bullish rips to sell their positions. Core inflation was actually the highest print yet. March was only 6.5. Yeah, that's not good news either. The full measured move from the current $18,000 to $25,000 range is down to 11.2. Yeah, I understand that. I did know about that. Also, the 886. I don't use the 886, so I would not have found that. COVID low to all-time high monthly demand. Also, think we might find a macro bottom down there. Yeah, it's possible. I do know that measured moves do play out in Bitcoin quite often. But I think if you're going to trade lower, I think 13.8 should be pretty damn close to the low of the market. Just because of that, it's such a big resistance. You know what I mean? And also, I know that there are Bitcoin maximalists out there that, like me, how I'm trading to just accumulate as much Bitcoin as I can. Other people are doing the same thing, right? Because we know that eventually the bull market's going to come back. Every single year, well, not every single year, but every single time there is a bear market, the world is falling, right? The sky is falling every single time. Back in '08, I mean, it was a terrible bear market. Make no mistake. You lost 50% of the value. But if you just look at this chart right here, you can see that, yeah, sometimes you get nasty bear markets, but the bull market always comes back. Always. And it always will. Because this isn't just a speculation vehicle. I mean, you've got funds in these things. You've got people's retirements. All the police departments and fire departments, all in America, their funds, their retirement, all that stuff in this, right? And the fund managers, they wait for bear market lows to be a buyer. And that's what we're going to do. Like anybody that's subscribed to this channel and watches the videos religiously, you're going to have a very good chance of catching the bottom. I'm not saying that to be bragging. I'm just saying that because I know. You know what I mean? It's going to happen. We are going to bottom out. And this channel will be one of the first ones that finds the bottom. I guarantee it. I guarantee it. We called the top. You know what I mean? Like the very month that the market stopped going higher, we called it. We called it. Now everybody watches the Fed. Everybody told me I was crazy and retarded when I said all that. But now everybody's watching the Fed because the Fed controls the markets. So once inflation starts to roll over, I think you're going to find a low. Will it be the ultimate bear market low? I don't know, but I'll be a buyer there. I will be a buyer there. We can pull up the 200 simple. That's not it. We can pull up the 200 simple and just look at that. That's a good indication of when you should be a buyer. I mean, on the weekly time frame, right? Of course, you can get lower prices, but if you just overall, if you've been trading, say, back since '08 and been a buyer at the 200 and not worried about how much further lower it can go, you know what I'm saying? Just buy it, buy it, buy it, buy it. I mean, overall, you outperformed hugely. So yeah, I mean, we could break down, and if we find resistance at the 200 and roll over again, then I'm going to say, yeah, there's probably a good chance that we see a big crash here, because the lower it goes, ultimately, the more volatile it will get, but ultimately it will find a low, it will find a bottom, and we will wait for that liquidity break to happen at the lows, and we will be a buyer there. We will pretty much catch the very bottom tick. That is my promise to you. We will nail the bottom tick of the bear market. We will nail it. We're going to nail it. It's going to be fantastic. And then you're just going to be able to sit in it and just laugh as everybody keeps calling bear market lows. I mean, and it's going to take time to play out. Look how long it took the bear market to play out here. Let's just do them both here. So there was the low, right? There was the low. It was 14 weeks later when you made a fresh bear market low. All right? 14 weeks later when you made a fresh bear market low. Then you had a nasty close here, and then not quite a bullish engulfing, but pretty much a bullish engulfing. So if we go back and look at how this played out, see what day of the week was it that found the bottom? We'll be prepared. I don't know if I can go back this low, but let's see here. We will be prepared. We will catch pretty close to the low. That's a fact. All right, so Tuesday. Was that the low of the week? No. Wednesday, Thursday, Friday was the low of the week. After making a fresh bear market low, this was your bear market low. You got downside continuation down to there. So we'll be watching it all week when we think the bear market low's in. And we'll look to be a buyer on the lows after the liquidity runs. So the way we play it is we'll just simply outline the previous day's low like this. And then at Trade Talk in the Discord, I'm going to be like, all right, we're trading back above the low. So we buy it and throw the stop under today's low. If tomorrow or Monday it goes back down and stops us out, we'll try it again. But once you made that run right there, oh, what happened? I hate this new bar replay. But anyways, you get the point. We're going to catch the low. It's going to be fantastic. It's going to be fantastic. So the market just opened on the SPX with a nasty gap down. So we'll probably see more downside continuation for the next couple weeks. Probably. Just because of that. What do we got on the 5-minute? Did it find support? It's still just playing around down here. I don't know if I'd be a buyer there or not. There's no support level. You're just in the middle of nothing. Back above this, 18,462. Yeah, maybe. But we don't even have that on this chart. Let's get that on this chart. So that's that daily support. Let's see if people are selling that level. No, they're buying it. See, retail, always trying to pick the bottoms. Always trying to pick the bottoms. Look how much freaking volume has come in down here at the lows. Yeah, man, that's a ton. Is it buying or selling? It's more selling than buying at the lows. More selling than buying at the lows. So this might be a good spot to be a buyer. People are shorting the lows. I hope you guys are not doing that right now. This better not be you. You better not be short at 18,350 or I'm going to be pissed. You do not do that. You sell swing highs, not swing lows. Oh, goodness. Heath, you are crazy and retarded for other things, but not trading or listening to the Fed. I am fat, crazy, and... Okay, I'm not reading that. Thanks, Wes. Based on previous downside expansions from weekly contractions, 95% chance low, 8, 7, 12, 5 by the end of the month. I don't know how to read that. 95% chance the low is going to be 8.7-12.5 by the end of the month. So, Devin, if I'm reading this correctly, you are saying that there is a 95% chance that Bitcoin will be trading from $12,500 to $8,700 by the end of October. You got 15-ish days, right? 17-ish days, maybe 18 days before that happens. That is a long ways away, my friend. I wouldn't doubt it if today doesn't get absolutely reversed. That wouldn't surprise me to wake up tomorrow morning and we're looking for bids during the live stream in the Discord. Tomorrow, right? Tomorrow. You see what's going on here today, right? More sellers are selling the lows than buyers. I wouldn't be surprised to see Bitcoin trading at 18.8 by 4 o'clock today. Would not surprise me in the least. Because so many people are trying to sell the low. And you got other people trying to buy the low. But, I mean, it's a down market. So you're better choice is to always sell resistance in a down market. You become a buyer of support in a bullish market. When markets are making higher highs and higher lows, you try to be a buyer at the higher low. But I mean, I don't know what data in the world would suggest that there's a 95% chance that Bitcoin's trading at $12,700 by the end of October. I could be reading that completely wrong as well. Hopefully I am. I didn't tell you that SPX will go lower, and therefore Bitcoin, my man, BTC, my man. I am in the bottom as one can be. So Ed sold the very bottom tick. He's lying. He did not. I pick up the low on an old conditional order long. So like you're just throwing out random limit orders lower. Someone mentioned that to me today in the Discord. They asked me if I do that. I don't do that. I do know people do it. You know what I mean? Also do it. Just find some random low number and just throw a limit order down there. If you get a crazy Bart wick, you get filled on a long position. It's not a terrible idea. The more exchanges that come online and the more liquidity providers start providing liquidity, you're going to see less and less of those scam wicks. And also on Bitget, there is no scam wicks. You can backtest every candle. There's no scam wicks on Bitget. I did a commercial for them not too long ago, and I did my research on it and found several scam wicks on Binance and Kraken that were like big ones, like 20% moves that you just don't get on Bitget. Their stuff is good. Like you're not gonna see many scam wicks. If Bitget's going down, then that means it's really going down. The price is really going down. It's not going to be a scam wick. Binance is still bad for them though, and Kraken is freaking god awful for them. I almost got liquidated. My whole account almost got liquidated once because of a scam wick on ETH BTC. Damn near margin called my ass. I got the email. I was sitting in my office. I had taken a long position. And I was sitting in my office, and then boom! I was like, "Oh!" And then all of a sudden, I see it pop up in the right corner of my screen. Bing! Kraken margin warning. I was like, "Oh shit!" But I got lucky because the very next 5-minute candle, it went right back up. Right back up. Ended up making money on the trade. But there for a second, it was I was grinding my teeth. For sure. Not a lot of data points, but that's correct, based on 2 standard deviations. Okay. Yeah, I mean, I'm sure you can get 2 standard deviations, but my friend, you know how much selling that would have to require for Bitcoin to get that low? I mean, you would essentially have to capitulate everybody that bought back before November. Because anybody that's like is even as far out as 5 and 6 months, everybody that bought Bitcoin 5 and 6 months ago, they're all underwater. And if they haven't sold yet, there's a really good chance they're not going to. They become long-term holders. Once they become a long-term holder, the chances of capitulation become a lot less. You would need a bad capitulation to throw Bitcoin prices down into there by October, by the end of October. Right? Is it possible that it happens? Of course, because you're trading under monthly support. You just made a fresh low. You just took out September's low. So it is possible that it gets down there, but just look at the size of that candle. All right, just that's all I'm saying to you, right? I'll go even just to 12. I'll give you the benefit of the doubt and go to 12 for this monthly candle. This is October's candle right now. You got 13 days to get to there based on your calculations. No matter what you're using, standard deviations or what. So this, you see this big capitulation candle here? That was when Luna, the founder of Luna, was capitulating. He was selling all of his Bitcoin, all of it. He dumped it all. That's what that's from. And look at how big that is. Just from that candle's high to low, you're looking at a 40% move to the downside. So from candle high of October to here, you need another 40% move. And you need that move to happen in 2 weeks' time. This would be a much nastier bearish candle than this one and this one. Is it possible? Yeah, anything is possible. But just based on 2 standard deviations, I wouldn't put my calculations at $12,000 in 2 weeks. And here, I can even do this. We'll just put it on a 2-week time frame for you to show you what Bitcoin has done for the last 4 months. Each one of these candles are 2 weeks. So you need one of these candles to stretch all the way down to there. Yeah, it's probably not likely, not 95% chance anyway. I'd say there's a 1% chance that that could happen. Not a 95% chance. There's nothing that says that this won't be the bear market low. This could just go down, take out June's low and reverse and be sideways to up for the next 1.5 to 2 years. All right? All we need is lower inflation, and the buyers will come right back into the markets. The hedge funds, all those people that manage, people's monies, they'll be right back in the markets. And Bitcoin will be on the top of their list to be buying because Bitcoin has such wonderful opportunities inside of it. I made more money trading Bitcoin this year than I made trading FX last year already. Just because I sold the 2022 yearly high. And it was just that easy too. Just that easy. I simply posted a tweet about it and everything saying that once you make a fresh yearly high, it's time to be a seller. And it was. I mean, that trade just, I like 5x my whole entire account on that short. It was insane. It was an insane move. It was a fantastic move. And we nailed it. We're going to nail pretty close to the lows as well. We're waiting on everything, but we're also taking long opportunities intra-week because we're day traders. That's what we do. We take long opportunities all the time in bear markets. All the time. Most of the time they don't pan out. You don't get a whole lot of continuation off of them, but you can still get bounces. You can still take money by getting long. You could get long right now because you're back above support. Will that trade work out? I don't know. Right? I don't know if it will. But if you close up here and you got long there, you're going to make money today at the end of the day. I don't know if that's going to happen. But that's pretty much all we do. Right? You get back above this daily support, then we will watch intraday support for potential buying opportunities because today's move could be faded tomorrow. Everything that happened today could be faded tomorrow. And I wouldn't doubt it because everybody is so bearish. Like, this is the first time I've ever seen as many people be bearish as this. And that we got that one company, they are the most bearish they've been since the bear market low of 2008. So if they're as bearish as they were back then, I mean, that's when they got really bearish. And that ended up being the very low, March 2008. That was the low of the SPX bear market. And that's when they were uber bearish. They're just as bearish as they were then now. So, does that mean a reversal? No, but you get my drift. Everybody is nasty bearish. So I wouldn't doubt it if the market wasn't as bullish as it could be for the rest of this quarter. come in Q4 hot. Q4's already been in, and it's already, you know what I mean? It's already nailed a high, but it just took out last quarter's low. So now would be a good time as any to be a buyer, just based on that fact alone. You took out last quarter's low, and you're already bouncing. So if tomorrow you're trading under that, then you're going to be looking for downside continuation. But like I said, I would not doubt it one bit, nor would I be surprised to wake up tomorrow morning, come to the desk, and see Bitcoin trading at 18.8. No, I have no qualms about it. Don't let your biases get in your way. Just trade price. We have taken out last quarter's low. That's a big, big level. I know it was just put in September, but it still remains that fact. This is last quarter's low. That is not subjectivity. That is objectivity. You just took it out. You just took out last September's low, which is last quarter's low. Let's see how price performs around 18,153. Let's see if it is a good place to be a buyer. We'll know tomorrow, because if you're trading under it, we'll know it's looking for lower lows. If you're trading above it, it could be a reversal. How much liquidity do you think that this 1 5-minute candle just generated by taking out last quarter's low? I'd say a lot. A lot. I wouldn't doubt it if there weren't a ton of buy orders just sitting right there at 18,153. A ton of buy orders just sitting there because it was last quarter's low. Or people like to blame market makers for moving price. Market makers don't move price. Price moves, right? Price is moving price. An algorithm is moving this, not buyers and sellers so much. But if it finds an equilibrium or a lot of demand here, price will rotate away from it, and it will go look for supply. That's how a market works. The market doesn't move in one. It just doesn't go straight one direction. It has for the last 7 days, but it usually will gyrate in an oscillating movement. Up, down, up, down, up, down, up, down. It's in search of liquidity. That's all it is doing. It is looking for liquidity. When it finds the liquidity that it wanted to find, it moves away and it goes in search for supply. So just being a buyer right there would have been probably a decent place to be a buyer, just for, looking for it to maybe go back and test the quarter open to see if that's where the sellers are. We know the sellers were at this week's open. I took a sell position there earlier into this week, right? This week, I took a short trade right there. This week, I took a short trade right there, and that short trade happened right here. So at 9 o'clock in the morning, Monday morning, when price traded up to the weekly open, I got short. And we just took out last quarter's low. I don't know that price wants to do that. I'm just saying, that's a big level. That's all I'm saying. We'll keep our eyes on it. If price fails to trade back under 18,153, I will be a buyer. Because look at the dollar. You did get a nice move. You did liquidate yesterday's high, but you're back under yesterday's high. So that just suggests to me that as of right now, there's just not a lot of demand above 113,592. Instead, it just found a lot of supply up there. Now it's rotating under resistance. So as of right now, you're back under resistance. That's resistance. You're back under it. A close under 113,291 will have me looking for buys on Bitcoin. Because this is suggestive. It's very suggestive. It's just saying like, hey, there was more selling that went on in this candle than buying because price is back under resistance. But we have to see where it closes because you can find buyers again at the open. Today's open. Let's see if those buyers are there. So price tested supply, found it, and now it's going back down to test that demand from the open right here. So we don't know that it's going to be a reversal yet. You can find buyers here. Right there. That's today's open. So there's a good chance that the buyers will step up again. And if price goes to trade away, then we'll know. And Bitcoin will rotate lower than the last quarter's low. We just have to wait and see what price says. And we'll take our chances when we have a little bit more info. Let me go up here real quick and we'll get ready to wrap it up. Not a lot of data points. Okay, I read that. I just want to make sure that I didn't miss any important stuff. Yeah, I read all that. I read that. Oh, and Run DMC said you also posted clearly that could easily be the high of month. It could even be the quarter high. Yeah, it could. It could. We won't know. I mean, we won't know until, the quarter plays out. And the quarter just got started. So to have a lot of sideways oscillations in the beginning of the quarter is a normal thing. Right? We just took out September or the Q3's low. So let's just see if there was buyers setting under Q3's low. If we're trading under Q3's low tomorrow, then yeah, it probably wasn't. There was, but just not enough to keep price elevated above it. So, but sellers will come right back into this market at 19,442. That's the open of the quarter. See the quarter. That's the open of the quarter, but that's not when it happened. Right here is when it happened. That's your quarter open. So you have traded up, set a quarter high, you have expanded lower, and now you just set a fresh new Q3 or Q4 low, and also you took out Q3's low. So in another day or two, we'll know if the buyers picked up there or not. People will be looking to sell a quarter open again. If you get above that, they'll be looking to sell the quarter high, which happens to be right there. But your quarterly range is starting. There's your monthly range. Your monthly range is your quarterly range right now. So October's range is the quarter range. We'll see how it plays out, but you're in the right place. You're not going to find a better analyzer of price or an analyst of price than me. You just won't. They're not out there. Or they're not on YouTube. All right. It looks like I've answered most of the important questions. If I did forget your question, you can always drop it in the comment section as I do read them all. Even all the scammers and bots. Possible short on USD JPY. Danny, yeah, we discussed that. We discussed that a little bit earlier in the stream. I do think it is one of the best opportunities, but what we need to do is we got to wait. We got to wait for it to find resistance. But I do believe that when inflation starts trending lower, the US dollar will come off because people will start to rotate their allocation of funds out of the dollar and they'll start reallocating that to risk. Right? And they'll start reallocating that to risk. It's in the dollar right now because the dollar is a safe haven and because the Fed is raising interest rates. We know with today's number that the Fed is going, there's a 98% chance that you're going to see another 75 basis point rate hike. We looked at that already. So I don't think it's time to be a short on it yet. But yeah, it's one of my favorite assets to look too short. Once we think that there's a pretty good chance that the low is in, we will be looking to short the USD JPY for sure. Yes. For absolute positivity. Yes, there is so much meat on that bone. I mean, if you just look at this yearly chart on this thing, it is freaking nasty. Look at that yearly candle. My goodness. It's the biggest one of all time on this exchange. There is a ton a person could make to the downside on that. Yes, sir. But just not yet. And apologies if you're not a sir. Sir is just a term. I don't mean it as a gender identifier. It is my favorite asset for a short. We just got to wait for it to happen. We know that the USD JPY, or we know that the BOJ is looking to intervene. We know that. We know that we're looking for the US dollar inflation to slow down. We need a few of those things to start happening, and then we will look to short it. I don't know if we'll catch the very top tick, but we will catch pretty close to the top of it, which is all you need to do, because if it does roll over and it continues to do so for another year or something like that, and you're going to be in a trade that you can essentially just set it and forget it. Yes, sir. It's going to be fabulous. Fabulous. Trap on USD JPY. It's possible as well, but it's not there yet. You don't have a trap yet. So this was the high. So if it was just going to be a liquidity break, it would have done it when it took out the high. But you got bullish continuation. That means there was people buying it above this. More people buying it than selling it. Demand is still very high in the dollar. But this is also, FX is tricky because it could also just simply be weakness in the yen that's causing it to move higher, because it's trading against one another. So, I mean, the yen weakness could just make this continue to go higher. But that's when we're not looking to short the dollar, we're looking to buy the yen. Does that make sense? We're not looking to be a short of the dollar. We're more or less looking to be a buyer of the Japanese yen, because the Japanese yen is the currency that might have central bank intervention. As long as our central bank in America is hiking interest rates, the dollar still looks good for investors to be a buyer of it. So when the Fed does its quote-unquote pivot or starts to become less hawkish, this will be one of my favorite assets to look for, technical setup. But it's not there yet. No, you're looking at bullish continuation. That's not a trap. Not yet. If you take out today's low, then one could argue that there's a slight chance that it's a trap. But then you still got to wait for a retest of resistance before you can take the short. So if you are looking to short this based solely on this being a trap today, then what you need to wait on is you need to wait for either today or tomorrow's candle to take out this low. And then you can wait for price to retest daily resistance, as that will be the area for attacking it to the downside. For not just us, but other professional traders as well. You will get a retest of resistance. It's very unlikely that it just drops, takes out this low, and all the way down. You will get a retest of resistance, because that's where the selling will take place. It's not a confirmation, but it does tell you something, right? It tells you that there is a potential for that to be the short entry, and a lot of people will load up there. But as long as retail is still trying to call the top on this thing, you got to leave it alone. Because that's a lot of liquidity. 82% of retail is net short USD JPY right now. 82% of retail. That is a tremendous amount of stop losses sitting right above today's high. A tremendous amount of sell orders is setting right there. 82% of IG's clients have stops setting right above 147,672. So you might get another run of that first. Let him tap into that, all that liquidity. Then maybe you start to droop. But we got to wait for it to happen. That's all we can do. Right now, if you want to be a seller of the euro, well, it's not the same on the euro. Did you test the open on the euro? You did. Last hour, you tested it. So if you want to be a seller on the euro, I don't know if the trade will work naturally, but that's why you stopped there. Also, there's the daily open. So, excuse me. All right, so here's your open. You set in a high, then you traded down. You set in the low. When did you set this low? Anybody in the chat? Anybody that's been with me for a while? What am I about to say? When did you set this low? When did you set this low? Wes? Ed? Anybody? When did we set this low? Almost. It was the London session. The London session usually sets the low or high of the daily range. And it did here too. This was your daily low. There you go. There they come in. Yes, the London session set the low of day on the euro this morning. And since this was the high, this is 1700 hours. So that's the open of the day. All you had to do at 2 or 3 o'clock in the morning, this morning, was just be a buyer. It was that simple. Be a buyer. Because why? Because you're trading at the low of day. That's why. That's why. That's it. And that's Trade Talk's London strategy right there. Just wherever you're trading during London, do the opposite. It doesn't always work, so you got to use risk management, but it happens more times than it doesn't. Over 50% this happens of the time. Over half of the time. The London session usually sets the lower high of day. Then you run up, boom, set a new high of day, and then the news comes out. Kaput. So you took out the low of day right after making a fresh high of day. That's a bearish signal. It is a bearish signal. So if you want to be short, watch hourly resistance, not the daily open. That's a good place to look for the entry. But if you start closing hourlies above your new intraday resistance, which is 0.96939, then you got to wait. As long as you do not close an hourly candle above this price, you can be short and you can aim for the low of day. But take profits on the expansion lower. Do not wait for a low of day before you take profits. You take profits before you get there. Because we don't know that it's going to stay down there. We don't even know if it's going to go down there. But that is the high probable scenario right now with the data that we currently have. Now, what we can do is we can get off of this and go over to Oanda, because Forex.com is stingy bastards when it comes to their volume. It's I can't even say the damn word, proprietary, their volume. They don't tell nobody. Look at your point of control. Look at your point of control. The most volume in today's range has traded at the daily open. People are selling this right now. They are expecting downside continuation. The entry would have been on the open test. So you're stopped 10 pips above it. If you're wrong, you'll get stopped out. If you're not, it'll continue lower and you will take profits down there. Move your stop to break even and see what happens from there. But that's a very bearish signal. When you make a fresh daily high and instantly go down and make a fresh low of day, that is very bearish. And vice versa. The opposite is true as well. If you make a fresh low of day and then instantly go make a new high of day, that is a bullish signal. So people will be jumping into this short. I don't know if it will continue or not. Yeah. So, Euro doesn't trade with Bitcoin inversely or otherwise, but I do like to keep an eye on it because it is such a high. It has, it's got such high correlation to the dollar's inverse relationship that a lot of times I will have Euro up on the monitor as well when I'm trading Bitcoin just to see what it's doing. Because sometimes the Euro will be doing something completely opposite. Like it was this morning. It was doing something completely opposite of Bitcoin. But now, that correlation is pretty well in line with one another again. Right? You didn't make a fresh high of day on Bitcoin because Bitcoin started to already roll over before the news. But we got to understand that we did just make a fresh quarterly low, so we can't be too bearish, not down here. We got to wait for a resistance test, or you can wait on the open test on Bitcoin. But as far as taking an entry today, I wouldn't. Maybe the selling comes back once price gets back up to here. But you can see there that the volume nodes here are a little bit bigger. There's just a lot of people down here trying to sell the lows. But there's your daily high. So your open on Bitcoin caused the high of day, not the London session. The open. So on Bitcoin today, in hindsight, if you would have just sold it at 8 p.m. Eastern Standard Time yesterday, you would be doing well today. The only info you need, guys, is the open, high, low, and close of the previous day and the current day. That's it. That's all I do. I analyze price each and every single day. All right. London, those Londoners. London, lots of London. Yes, for sure. You guys have a fantastic day. As always, we will be here again live on Tuesday. Today is Thursday, so we're pretty much done for the week. If you have any questions, drop them down in the comment section, as I always read them all. You guys have a fantastic day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.